Welcome to Success in Motion. Join us as we dive deep with top leaders, entrepreneurs, and professionals, uncovering strategies to grow, scale, and succeed.
Welcome back to the Success in Motion podcast. My name is Alex Burhoe, and today we are joined by Gregg Gruehl. So Gregg is an industrial warehouse and property developer and operator. And thanks again for being on the show today, Gregg.
Appreciate you having me, Alex. Looking forward to it.
Absolutely, me too. So Gregg, go ahead and just give us a quick snapshot of what you do and what your business is.
Yeah, so I'll just give you a quick brief history, and then we'll jump into what I'm doing today. So, call it 7 months ago, I left Stag Industrial, which is a publicly traded industrial REIT, where I led acquisitions for the Midwest. After doing that, I decided to join forces with my brother, Gunnar, and we went down the track of trying to figure out, how we wanted to position our firm. So our initial thesis when I left was, hey, let's take a look at deals that institutions aren't doing. So sub $10 million, smaller buildings, maybe lower credit tenants, maybe some functionality issues with the building. And we'll go out and buy stabilized deals because I knew of several that were on the market that were just too small for them institutions to get into, which was my former background. Well, as that kind of played itself out over, the first 3 months of our firm, we made some offers. But returns weren't really great enough to really raise the capital. So, and on the ones where we were able to raise the capital, the pricing wasn't right for returns. So we kind of went back to the drawing board on kind of, what we were really looking for. So that's when we kind of landed on industrial development. Now, not all of the industrial development is created equal. Right now, if you look at the headlines or read any research reports on industrial, vacancy has ticked up over the last, call it, couple of years due to slowing demand from retailers, 3PLs, e-commerce. And that is typically in the bulk size. So larger buildings, call it above 300,000 square feet, where my focus niche is in shallow bay development. So buildings that are sub 100,000 square feet, not typically leased to one user, but chopped up into smaller spaces, call it 10 to 20,000 square feet. And if you look at across the country or in market specific, you'll see that the vacancy rates there are in the 1 to 2 to 3%, whereas the bulk is 7, 8, 9% on any given market. Also, what I like about that size range is the rents are also higher. So not only you have less vacancy, so you have quicker leasing, you have less vacancy, you have higher rates. So it makes returns better.
Yeah, that's awesome. Now, I know a lot of people who have been looking at kind of the industrial market, like you said, they're like, hey, this might be slowing down. There's not as much people trying to get in and renting there. So tell us a little bit about what do you guys do that kind of either sets you apart, or what have you found really helps fill in those vacancies and help you guys do a good job?
Yeah, so as we're kind of looking at projects, we're obviously in the early stage, and as a developer, projects take a long time. It's all about finding the niche where there's still velocity in the market. So I operate in the Midwest. We look at deals in Ohio, Kentucky, Virginia are kind of our main markets where we're looking at sites. And if you look at the market reports, you would see for any one of those markets within that, you will see that bulk leasing is slowing down for sure. But one area over the last 20 to 30 years that hasn't been developed is buildings under 100,000 square feet. And that was due to costs. The construction costs were very high. Tenant improvement costs were also very high for those smaller buildings, and the rents didn't make sense. Fast forward, everybody built bulk over the last few years because it made sense on a per square foot construction basis. And the lease rates started moving up there. Well, because vacancy has been so low, you've seen rents grow even faster in the call it 20,000 square foot suite size in almost every market. And in certain markets, this hasn't even been tapped yet. So, we might be trying to be a first mover in certain markets, but in markets like Columbus, this is proven out by double digit rents, near $14, where rents in Cleveland haven't moved yet because nobody's built it. So we're looking at it like, okay, here's our potential first mover opportunity, yes, we're going to take some risks, right? But it's a lower amount of capital to take those risks on a 50,000 square foot building. It's just not a massive project.
Yeah, for sure. And that totally makes sense, focusing on those areas that not as many people are focusing on, making it as good as you can. So, some of the listeners, they might be interested in real estate or have looked into it. Now, obviously, as you've niched down, what comes really easy to you that might be a bit of a challenge for other people?
So industrial in general is a tougher asset class for most people to understand, right? You have a ton of multifamily real estate investors, and that happens as a genesis of, hey, I'll buy one residential property. Hey, I'll buy a second residential property. Now I might move to duplex. Now I'll move to a fourplex, eightplex. Oh, 30 unit. Oh, now I'll syndicate a 100 unit, right? So I became a commercial investor over time, right? That's the
Hmm.
typical, the genesis of it.
Yeah.
Where industrial kind of is gate kept is the fact that there's no progression that leads you down that path, right? There's no apartments.com to check rents of buildings in your area. Most people don't even understand that businesses lease these buildings and don't own them, even though the tenant's name is on the building, right? Amazon leases all their space. Well, for the majority, I would say 90% of their space they lease. Most businesses lease their space, and that allows for flexibility, but most people don't even understand that, right?
Hmm.
So it's a bigger education for people. So when I'm talking to investors, I have to educate a lot more than the multifamily investor or syndicator or capital raiser or sponsor, because almost everybody's rented an apartment or paid rent at some point in their life. So they generally understand how that operates.
Hmm. That's fair. So, if someone is wanting to look at this industrial real estate, again, there's a lot of education. What tips would you have for them, or what would you recommend they start learning about?
So if you really want to start learning about industrial, I would start looking at the big brokerage shops and market reports. You will learn some of those terms and terminology and how the markets are operating on any given individual market, say Cleveland, Columbus, Cincinnati, any of those markets. Start pulling those, maybe pull their national reports. Honestly, I'll tell you, it's probably reach out to somebody who has a background in it would be my main point, like myself, because you really don't see the typical everyday retail investor who's going to invest a 50 grand or $100,000 share into a syndication, typically being provided opportunities in industrial on a mass scale. So you need to find somebody that has that background to really educate you, and really kind of move the needle on your mastery of understanding the space.
Absolutely. And that makes sense. Honestly, that mentorship is so important in really anything you're going in. So with you, what have you found been some of the biggest challenges or obstacles that you've had to overcome in your career?
Yeah, I mean, so in my overall career, I chased roles. My goal was always to be in real estate, always to run my own firm, but I always made it a point to chase roles that gave me a new skill to learn. So if you look at my progression, after college, I started out in property management in a rotational program at a public REIT, then went over to asset management, a leasing, finally acquisitions before starting my own firm. So kind of adding pieces to the puzzle, right? But the challenges have actually really come in the last, call it, since starting the entrepreneurial journey. Leaving an institutional shop where deals just flow to you. You have a big balance sheet. You don't have to raise capital. You don't have to think about wear every hat, accounting, legal, SEC laws, any of that. And everybody respects you automatically. And you kind of come with a big ego there. So one of the biggest things is you have to drop your ego. Nobody is going to transact easily with you, right? Like you just learn through grinding it out as an entrepreneur. And so, like, for example, recently we lost a deal even though we were the highest bidder, and they didn't even take us to a best and final round to do a buyer interview
Mm,
because the other three bidders, albeit it's a smaller deal, were all institutional and had 10 to 20-year track records of closing deals. We're a newer firm stating that we're going to syndicate the investment funds. They go, well, what is 200 grand difference in your offer? You know, really to our execution risk of, hey, we're going to spend legal dollars. You know, we're not going to be able to market this property for 3-4 months if you drop this deal. So, you know, that was a lesson learned that if you don't have the track record, it's great to partner with people, A. And B, that also pushed me further down the development line because most of the institutions aren't owning land that I'm trying to buy. So
Mhm.
I can go connect with the landowner or a farmer or a housing owner that has land in an opportunity zone where I want to, you know, kind of invest. And that's a lot easier than transacting with people sitting in Wall Street or in Boston or Chicago.
Absolutely. And I bet that has been a transition from, having most things handed to you to now you're having to generate everything. Um, if someone else is kind of making that transition from a job where, they're getting things a little more handed to them, it's a little easier, what suggestions would you have for them as they branch out on their own?
I would say try to drop your ego as quickly as possible. And I would say the key to that is just putting in the work and realizing I think you're going to have to take the lumps, right? Like over the last 6-7 months, like deals falling apart, sellers not wanting to sell, like all these things you only learn by doing. So you're not just going to be able to easily do that and realize that you're, unless you are independently wealthy already, you're not just going to be able to go from 0 to 100 as an entrepreneur, even though it seemed so easy when you were sitting in the institutional seats with a big balance sheet.
And I think we've all noticed that where it looks so easy when you're looking at it on paper and you're like, hey, this should be no big deal. I can do this. And then as soon as you become the driver, it's like, whoa, that's different than I was expecting.
Yeah, I mean, I would say people read the book Rich Dad Poor Dad. I have. It was one of my founding books of why I wanted to go into real estate. What he
Same.
doesn't do initially is talk about the fact that being a real estate investor where you're buying houses is you're going to get the call to fix the toilet. You're going to get the call that a tree fell on your house, right? Where that's a lot of, you've added a new job if you're buying residential properties yourself, right? And so, like, so what I kind of do is I offer expertise in industrial to retail investors that they don't have to worry about those things. And the other beauty of it is with industrial is they're triple net leases as opposed to like multifamily. So any expense increases, tax increases, insurance increases are passed along to the tenant. So you get even more peace of mind that you can open up your mailbox and get a check as a passive investor, as opposed to really doing the work and taking tenant calls in the middle of the night or trying to collect the rent checks.
Yeah. And that actually leads to the next thing I want to talk about is, again, that passive income, because I know a lot of listeners are really interested in creating passive income for themselves. So, what are your thoughts on, again, the passive income? I know you were talking about how sometimes it's less passive than you would truly hope for. How have you been developing that for yourself?
So, given my background, I had access to people who had brought deals initially. I had seen a ton of multifamily deals because I had previously worked at a relatively large multifamily firm as well prior to the industrial part of my career. And I've always believed in investing and passive investing, and relying on people with the expertise. Yes, it's great to, own a couple duplexes, benefit from the depreciation, but you're putting in a lot of sweat equity, right? Whereas I can offer you the depreciation benefits, the income, and none of the headaches. You might get a headache that I tell you that we didn't get the building lease this month, but once the tenant's in place in industrial, they're typically 5 to 10 year contracts, right? With in place rent growth. So
Mhm.
at that point, when a building's leased on a development, I'm sending you checks and just general updates, right? You're not having to deal with any of the headaches mentioned earlier. So yeah, I mean, passive income is the lifeblood of freedom, really, and that's what the wealthy really know, and the people who have saved and invested know is passive income's better than creating more jobs for yourself. That's for sure. There's only so many hours in the day,
For sure. And I love that. Like you said, there's only so many hours in a day. Do the best you can to make it as truly passive as possible.
for sure.
So, as we're wrapping up the interview, what exciting plans or initiatives do you have coming up in the next, say, 6 to 12 months?
Yeah, so we're looking at several deals right now and launching our first raise in the next few months as we lock up a couple different land sites that we're, currently going into the due diligence period on and planning phase. So I'm looking forward to getting the, call it the first successful project underway as a new firm, which is great. And we have several of those projects actually coming fast and furious due to laying a solid foundation as a new venture. And that's what's really exciting me over the next, 3, 6, 12 months.
Yeah, I love that. Well, that's exciting for you, and good luck. So,
Thank you.
Gregg, thank you so much for your time today and sharing all those thoughts and tricks and what you've learned. If anyone would like to connect with you and talk with you more, what would be the best way to get a hold of you?
I would say right now that's probably on my LinkedIn page, which is, just search my name, Gregg Gruehl. It's not common. Last name is not common at all. So very easy to find, as well as the 2 G's on the end of Gregg as well. So pretty easy to find there. You can also go to our website, greelcmp.com, and feel free. My email is on there. My phone number is on there. So go ahead and reach out. Always happy to chat with new people or people wanting to learn about industrial real estate.
Well, I love it. So go ahead and go connect with Gregg on his LinkedIn or on his website. And thank you so much for listening in, and we will catch you on the next episode.
Awesome. Thank you very much, Alex.
Thanks for tuning into Success in Motion. Want to share your story? Visit successinmotionpodcast.com/guest to apply and be featured on the show.